Hey everyone, and welcome back to Business Mindset. The idea of paying off your mortgage in full can be pretty daunting. After all, we're talking about hundreds of thousands of dollars of debt. Paying that much money off today would likely be impossible, unless you won the lottery or maybe had a rich uncle die. And it's not like you can swipe your credit card and just be done with it. However, it's relatively easy to shave years or even decades off the payment schedule, increasing your equity and saving you plenty of money in interest payments. Today, we're going to be talking about the best ways to pay off a mortgage quickly. Make sure you say it to number one, as you don't want to miss this unique topic, best ways to pay off a mortgage quickly. Let's get started. Number one, switch to a bi-weekly payment. Instead of making one monthly payment towards your mortgage loan, you can make a half-size payment every 2 weeks, resulting in extra payments during the year. In other words, if your regular mortgage payment is $1,000 a month, you would instead pay $500 every other week. These extra payments will have nearly the same impact on your budget as paying one monthly payment, but because there are 52 weeks in a year, a bi-weekly payment schedule will result in 13 full-size payments a year instead of the usual 12. You'll be making an entire extra payment every year without having to scrounge around for the extra money. To look at some real-life numbers, if you have a 30-year, $200,000 mortgage at an interest rate of 5%, making bi-weekly instead of monthly payments would save you $34,328 in interest, save you from extra mortgage payments, and allow you to pay off the mortgage balance almost 5 years early. Number two, make extra principal payments. When you send in your monthly payment, most mortgage lenders will allow you to make an extra payment and mark it principal only, meaning that this payment will pay down the principal rather than both the principal and interest on the loan. Paying down even a little bit of extra principal early on in the loan can save you quite a lot in interest charges, not to mention getting you out of the loan several years ahead of schedule. So consider sending just a little extra to the loan holder every month as an extra principal payment. For example, if you have an odd payment amount such as $1,046 a month, you can round it up to $1,100 and dedicate the extra bit as payment on the principal. Even if it's only paying an extra $50 or so a month, the principal payments will add up faster than you'd believe, speeding up the mortgage payoff process. Number three, bring your lunch into work. Toting a brown bag to work every day won't win any fashion contests, but trading out lunch for eating in it can make you lean and mean mortgage-free machine 3 years ahead of schedule. Applying your $100 a month in lunch money to your mortgage will also save you more than $28,000 in interest. Other small sacrifices can go a long way to help pay off your mortgage early. Put Andrew Jackson to work for you by adding $20 to your mortgage payment each month. Based on our example of mortgage numbers above, you'll pay your mortgage off a year early, saving over $7,000 in the process. How much could you save if you took your Starbucks money and added it to your mortgage payment each month? According to the recent report, the average American spends $3 a day on their coffee. That's around $90 a month added to your mortgage payments, which will save you $25,000 in interest and 4 years on your loan's life. Number four, put your windfalls into your mortgage. Many taxpayers get a refund every year. If you use most of that money as an extra payment on your mortgage, you can make serious progress in getting your house paid off. Other potential windfalls include a bonus from work, a successful garage sale, or a relative's gift. And if you get a raise, consider putting all the extra income into your mortgage. For example, let's say your monthly take-home pay was $4,000, and your 3% raise means that you're now getting $4,120 a month. Put that extra $120 into your mortgage every month and you won't even miss the money since you're not used to having it. Number five, downsize. Downsizing your house could be a drastic step, but if you're set on getting rid of your mortgage, consider selling your larger home and using the profits to buy a smaller, less expensive home. With the profits from selling your bigger house, you may be able to pay cash for your new home ultimately. But even if you have to get a small mortgage, you've succeeded in reducing your debt. Now your goal is to get rid of that debt as quickly as possible. The smaller the balance, the quicker you can make it happen. We all know hindsight is 20/20, but if you take advantage of the following tips before you purchase your next home, you'll be in a great position to pay that mortgage off early. Number six, don't bite off more than you can chew. Before you search for homes or find a real estate agent, it's essential to ensure you're financially ready and can afford the house you want to buy. This handy checklist is a great place to start. If you can't say yes to all 6 questions, it's best to put your home purchase on hold. Am I debt-free with 6 to 3 months of expenses in an emergency fund? Can I make at least 10%, preferably 20% down payment? Do I have enough cash to cover closing costs and moving expenses? Is a house payment 25% or less of my monthly take-home pay? Can I afford to take out a 15-year fixed-rate loan? Can I afford ongoing maintenance and utilities for this home? Number 7, maximize your down payment. Best way to buy a home is with 100% down. Paying cash for a home may sound weird, but imagine all the fun you could have without a mortgage payment weighing you down. If you can't postpone the purchase until you can pay cash, plan to put at least 10% down at the closing table. Of course, 20% is even better because then you'll avoid paying private mortgage insurance. PMI typically costs between 0.5 to 1% of the loan amount annually. For example, on a $250,000 mortgage, PMI will cost you $1,250 to $2,500 a year. Why give the bank extra money each month if it doesn't pay your mortgage down faster? Keep in mind that the more cash you put down on the front end, the less money you'll need finance. That adds up to a lower mortgage payment each month, making it easier to pay off your mortgage early. Number 8, consult a pro to find the right home. If you're looking to buy a home that fits your budget or is ready to sell your home, consult an experienced real estate agent whose advice will save you time and money. A buyer's agent can help you navigate through the home buying process. In some cases, they may even help you find a house before it hits the market, giving you a competitive edge. And when it comes to making an offer, your agent will negotiate on your behalf so that you don't pay a penny more than you have to. Number 9, refinance it into a shorter term loan. Got a 30-year mortgage? Refinancing it as a 15-year loan will blast you through that mortgage a whole lot faster and will probably get you a better interest rate as well. Shorter loan terms are typically paired with lower interest rates. While the 30-year home loan is most popular, some homeowners may not be aware there are several different terms offered by lenders. Many offer 10, 15, 20, 25, and 30-year terms. And thanks to the shorter time frame, you'll pay a lot less money in interest, so the payments on a 15-year loan are not double the payments of a 30-year loan, they're significantly less. Let's compare a 20-year term to a 30-year term. First, most 20-year mortgages carry slightly lower rates than a 30-year mortgage. Typically, 20-year rates can be anywhere from 1/8 to 1/4% lower. Let's say you're financing a $250,000 loan on a 30-year term at 3.75%. Your principal and interest payments would be about $1,150 a month. Using the same loan amount but with a 20-year term at 3.625%, your monthly payment would be $1,450. You'd pay a few hundred more per month, but you would be mortgage free in 10 years less time. The best part, the savings on that 20-year mortgage would be over $65,000 if you kept it until it was paid off. Another benefit of refinancing to a shorter term is that you don't have to start over 30 more years. For many homeowners who are well into their original mortgage term, starting over another 30 years might not make sense. But with a 15-year refinance, you could lock in a low interest rate and a shorter loan term to pay off your mortgage faster. Just note, the shorter your mortgage term, the higher your monthly payments will be. Number 10, check your mortgage terms for penalties or special instructions. Some mortgages come with prepayment penalties. What that means is that if you try to make an extra annual payment, increase your monthly payments, or make a lump sum payment, you may have to pay a fee for paying your mortgage off faster. Similarly, other mortgages allow prepayments, but they only allow them at specific times, such as the mortgage's anniversary. The best thing to do is call your lender to ask how you can go about paying more aggressively without paying penalties. Lastly, when you talk to your lender, ask if there are any specific instructions that you have to give along with your additional payments. Some lenders require that you explicitly state or write a note explaining what you want the payment applied to the principal. Otherwise, your payment could be misapplied, making your effort for naught. For example, say you sent an additional end-of-year payment. Without the note, some lenders might apply to the additional payment to the following month instead of doubling up. Paying off your mortgage is a big deal, and even if you've managed to pay down other debts in the past, nothing brings quite the same satisfaction as a mortgage-free day. Most of the strategies you can employ to pay off your mortgage off as quickly as possible include making prepayments, including extra annual payments, additional monthly ones, and even lump sums when you come into extra cash. On top of that, make sure you budget wisely and put as much money towards a mortgage as possible. While you are here, go ahead and click on one of the 2 videos on your screen. See you there.